Now, a lot of people might ask, well, what about the SPY, Ernie? Can I trade the SPY? Well, you could trade the SPY, but you wouldn't want to. And the reason why you wouldn't want to is the type of option that is on SPY is very similar to any other ETF or any stock. It's an style option. And what that means is that you can have early assignment. Now, remember I said that there's an obligation of the seller of that option to deliver something, the underlying. And it is also the right of the buyer to receive that underlying at the price that they want. Well, that's a problem with American style options because you can have early assignment. So in other words, if you're the seller and you get too close to options expiration and too close to the strike price or the in the money, you could be assigned. And you don't want to be assigned. And the reason why you don't want to be assigned is that it may not be your plan. I mean, as far as a day trader, if you're just trying to make money off of the premium, the decay of premium, you don't want to have to deal with the margin requirements of holding a bunch of stock. So that's one of the reasons why you don't want to trade SPY, because it is essentially a stock and there's a chance that you could be early assigned. And most brokers will kick you out of that trade if they feel that you don't have the margin to be able to handle however many shares that you might be obliged to take over. And so that's really the problem with American style. Now, on the SPX, the XSP, and the E-Mini futures, they are European style options. And so what that means is that you can't get early assignment. There's no assignment until after expiration. So that means that you can then take that 0 DTE right into expiration. If you're in the right spot, you have the chance of maximizing your return on your trade. And so that's a really desirable thing for someone who's day trading these things. They don't want to be encumbered with the assignment and have to worry about that prior to that point where you can collect the maximum profit. And that's really key, because those waning hours and waning minutes is when the decay is happening at an incredible rate. I mean, you can literally see the premium building minute by minute when you get right down to the last minutes. As an example, you could be in a very simple butterfly, for instance, and you've logged or you have unrealized profits of, say, $1,000. You could have another $1,000 left with only 15 minutes left. Now, you don't want to get kicked out of that position if you have $1,000 that you could potentially make, and not only get kicked out of it, but potentially get kicked out at a loss because they don't give you the option to get out at the time that you want to get out, or get assigned a whole bunch of stock. You just don't want that. But with the SPX or the E-Mini, that's really not an issue. Now, with the E-Mini, if you do go into expiration, you may enjoy the benefits of the profit that you made, but if you're in the money with any of the legs of your position, you will get assigned an E-Mini contract. So for that reason, most people that trade the futures tend to wait until the very last minute and then exit the position before they go into expiration. So those are the big things that you have to really watch out for as someone who's into 0 DTE. But they're minor things. So anyways, the whole point of this is that it's a fantastic vehicle and opportunity to make substantial profit.